This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, now we'll take a look at the gold market. Well, as you have said guys in your comments to the gold thread, that you didn't have the spike up that was here on the Alpera UK data, but you don't have it. As you can see, the Alpera UK also has corrected this and erased the spike that was previously on this chart. So probably Alpera corrects the data on the next trading session. Well, that's why I do not like to rely on the retail forex brokers, especially in the terms of the data of the commodity markets. As you can see, this data is really not very accurate. Anyway, if this splash up wasn't in place, then it bit changed our analysis. So take a look what is going on currently on the gold market. Market in fact stands flat during the 5 trading sessions in a row. In fact, in the range of this highway, some indecision pattern, small candle with the long tails. Okay, as you can see, 1, 2, 3, 4, 5th day in a row market stands in this tight consolidation. This indicates the contraction of the market, the period of the common contraction, and market stand flat. But usually this price action stands before some fast acceleration in one or other direction. Usually market blast up from such kind of the consolidations rather fast. And I suspect that this move should be to the upside. Market probably will show some splash to the upside, because take a look what has happened here. Market is trying to continue move down, taking out of these lows, and returns right back. That was some sort of the bearish trap, since this is looks like the bullish flag pattern. That was some kind of the bearish trap. The market has failed to break this consolidation down and continue move down, returns right back. Well, the destination point of this potential breakout at minimum will be daily overbought that is stand for today trading session around 1505, and that is also, recall, weekly confluence resistance. So that will be really stronger resistance there that market will hardly pass through just by the moment. We have talked about this previously, and also why I think that some market will probably show to the action to the upside rather than to the downside, because it has erased this failure breakout on the intraday charts. You will see it, and also because not all targets have been touched on the intraday charts. Well, on the 4-hour time frame you could see it. First of all, if we have no spike to the upside, then the target of this ABCD pattern hasn't been hit. Also take a look how market behaves here. Plunge down and gradual returns right back, erasing overall move down. And what is more significant is that currently probably market will show even greater swing to the upside than the previous swing down. Trend turns bullish here, although it's very calm trend. As you can see, no separation between the lines of the MACD indicator, but currently trend holds bullish here. Also take a look at the potential targets. 127 ABCD target stands right here. It's around 1507. That's the weekly confluence resistance and daily overbought. If we will measure this 127 extension of that more striking swing, in this case the 127 will stand right at the 15 even area. Well, that was also the wash and rinse of these lows. As you can see, market grab the stops below this low and returns right back. All this point on the potential move to the upside. Recall that our trading plan, as we have discussed a million of times already, is based on mostly on the weekly time frame analysis, and in fact we are expecting the starting point of the downward retracement on the gold market, and we are mostly interested with the end point of this retracement to possess ourselves on the long side of the market, rather than the starting point of this retracement. But still, since this retracement will take place on the daily time frame, that's in general long-term time frame where we could take the position even the short position, probably this pattern could be formed today, since today the non-farm payrolls release, and if the data will be weaker than expected, that will probably support the gold prices, since this will mean that the Fed Reserve will probably postpone the closing of their quantitative easing program, and that is the positive sign for the gold. And that some liquidity will continue to flow in the markets, that increases the probability of the inflation and so on, and that will be the support. That could lead to the splash to the upside and hitting of this target, and after that some pattern could be formed. Maybe we will get the butterfly here, butterfly sell. Maybe that will be some kind of the head and shoulders later, I do not know. But the fact is that non-farm payroll release could trigger the starting moment of the forming of the reversal pattern in the gold market. That in turn could trigger the retracement down that we are in fact expecting to see. That's why the current situation in the gold market is significant for us. Well, whether to take the position in the favor of the upward action or not, that's a bit difficult question, since due to the volatility action, even if you will take the correct position, you could be just washed out by the volatility. So that is stand on your decision. But if you would like to take the long position, probably could try to enter along with the position against these lows, because currently we have signs that potential move to the upside. But probably it's better just to do nothing, wait when the non-farm payrolls doom and gloom will come down, and after that take the reasonable look at the gold market. If we will get any patterns, we will use it definitely. Well, that's just will be the safer solution, I suppose. If you already have the long position that you hold somewhere from that move to the upside, well, probably you could try to keep it here, because as I said, there's some signs that market will show this some spike to the upside, probably for another $30 per contract. That's my current view on the market. So let's see how it will turn, and I hope that finally we will get the pattern that we would like to see.